Vincenzo's Go Crypto Investing this noontime gorgeous mid-spring day with overcast, a few fair weather cumulus with a thickening and golden, darkening mid-spring blue skies with the sun in the background with a current chilly but rising temperature of 48 degrees. Jay from just north of downtown Detroit inside the Vincenzo mobile compound in the great state of Michigan, right? The assault on the dollar continues. It is now below 90, now below 100, down to 99.44, right? Just below 99.5. You can see, and this is all very critical. And this assault started back during the COVID, right? And then we had the fake manipulated to facilitate the illusion that they're fighting inflation. We've been in this rising channel, you can see here, for the better part of 15, 16, since about 2008, late 2007, 2008. And you can see we've hit major upper resistance back here a few times in 2009, 10, then again in 2015, 16, then again at the end of when they were having the max illusion that they were actually trying to fight inflation. And then we've hit support multiple times too. We hit it once right here in 2012. We hit it back here in 2008, rode along it in late 2012, 13, hit it again in 2017, faked out below it in 2020, and now we've been back along it for the last year and a half. And now on this time, it doesn't show you the volume, but this is a big forceful move. This is the biggest forceful move on a breakout or threatening to break down out of this that we've seen since we've been in this channel. If the monthly closed today, there's still time left to buy back in the monthly, but where the monthly's at, you can see this candle from its peak wick last month to the bottom of the wick where we're at now. It's down 10% and threatening to break the critical 100.733 level and confirm out of this channel. And as we do know, a technical target out of a channel is the bottom of the channel. So that would be all the way down here at 81.36, right? That would be a major area just below this yellow-orange support box at 83.5, 83.4. And that anytime the dollar tanks and goes down and loses value on the market, the stuff you're buying with dollars costs more. So that's inflation on purchasing power. It eats away at Americans' purchasing power. Anyone using US dollars, when the dollar index is strong and is rising, you're able to buy, and it's offsetting prices that are naturally rising. They won't rise as much or might even go down in your local currency depending on how strong your currency got. But when you're getting weak, like we are right now, that enhances inflation and prices that are rising and things that cost more if you're purchasing them in US dollars, right? So this is a very critical time for the dollar. It's something that's got to be watched closely to see if we can get some buyers. If we don't get any buyers in the dollar, unfortunately, we're coming all the way down to this major area down here, which we're going to put a clone on, and then we're going to take this and we're going to move it down. We're going to move this on this major support level, but put the correct color. And then we would be coming all the way down here, make this orange, to this 92, right? And that's critical. That's a big fall from where you're at now. This 100 has been a major support and resistance level for a while. And because the assault on the dollar with the tariffs and the uncertainty around the world and fears of recession and a global depression have tanked the US dollar with the tariffs on, tariffs off. But it has had a magnificent run in gold. And look at gold bullion. We've been on this since this channel, and this is why you need to become members of Jabroni Killers, because you get the truth, trust, education, and information. Gold's up $97 an ounce. Today, $97 an ounce. At a new record high of $3,325. Silver's up over almost to $33 again. Up 2% today, right? On this bull run just continuing and accelerating to the upside. You can see gold year to date, gold bullion, 41.94% in the last year, right? 41%, the bullion's up $982 in a year. The last 5 years, it's up 1,750 or 111%. The last month, it's up $342 or 11%. The last 3 months, it's up 23. You can see it's just accelerating to the upside. We're almost to our target that we've been talking about since we came online. The only one in the sphere, in the crypto sphere, that had a $3,500 target based on this after the 2008 financial crash and the bull market and gold that saw it get up to about $1,906. You can see right here in this yellow or this blue. We'll make this an even more absurd color so you can see it. We'll make it, see that? The cup and handle. This was a nearly 2-decade long cup and handle. And these are in the macro time frame, the most bullish signals you can get. And we identified this in April of 2020 when the price was sitting down here at about 1,600, and then it skyrocketed up. You're just interfering and being bullish. Advertisement, we still do not want to buy you until you hit the neckline and form the handle. We drew this out with that target up there. And then we proceeded up through the spring and early summer to about August of 2020 when we peaked out at a new record high, and then went into a 2.5-year consolidation that we told you was the handle the whole time, but nobody paid attention on the crypto. We have this pattern. You go from the neckline that's up here, or you go from the top of the cup, overhead resistance at the two double top highs, right? And the first one was set back in 2011. The second one was sent back in August of 2020, right? And then you have the rounding bottom right here, which is a cup. You go to the bottom, targeted move, bam, $3,538, and that's been our target ever since. If now that we see how we got that target, first mover advantage that we gave you when we came on, and there's a reason that we bought all of our mining stocks that we did and we're talking about, and you can see that gives you a technical target, bam, 35.38, and you can see we were started to talk about this when we came on in this blue circle, and then the whole time on this consolidation from the peak all the way down when it formed this handle, telling you this is the handle. And we told you for 2 years that gold was going to break out. Gold was going to $3,500. The mining stocks were going to have a bull market, a once-in-a-generation bull market. The mining stocks are in still the beginning stages, but accelerating in their once-in-a-lifetime bull market. $3,500 is just the first target. Gold's going to $5,000 after, but there might be a correction, 1,000 or 1,500 down when you hit this major target. But gold eventually in the next few years is going to hit $5,000. We're about to hit our first target. It's having this 3 or 4 days now. It's went up $100 in a day, or nearly $80, $95, $103, right? B2 gold is getting closer to $4. Silver is almost over 33. And as you know, I think silver's going to 50. Kinross gold, I'm up 189%. We're almost to our first 2-bagger. Barrick gold, we're doing very good on. First Majestic, we're doing very good on. Fortuna silver and Pan America silver. Fortuna and Pan America, both of them are edging near 100% up. I think they're about 75% right now up on the return. Rivion's almost back to even, but these are the mining stocks that we've accumulated. The portfolio value is at $36,000. It's at our personal fund. This is the Vincenzo fund. I'm not a financial advisor. I am not promoting or telling you to buy any of this. These are just my funds, and I've coined it the Vincenzo fund because it's the portfolio that I'm in, and it's my own personal fund. And these are the things that I own, and we've been buying them since 2019, right? And then started buying Rivian when it tanked and got down below $13 after it IPO'd, but we're starting to reap our rewards. I still believe these are very, very cheap and are undervalued and have not caught up to where and reflecting the current price of the metals that they're selling, because these are gold and silver producers. Gold's at record highs every day. It's been over $2,000 for almost a year now. It's been over $3,000 now for quite some time. And oil is very, very cheap right now. So their operating costs are lower because fuel is their main operating cost. And the bullion that they have in the ground and that they're digging up are at record, so their earnings should be reflecting that, and the stock price should be showing that, right? But they're not. They're starting to catch up. Kinross Gold is one of them, and you can see Kinross Gold in the last year, it's up 134.26%, and in the last 5 years, it's up 272.41%, and I'm currently up 190% on it. We're in at $5.22, right? And we're riding this. We've been in it for quite some time. I think it's going eventually breach its all-time high. I think we're going to hit $30 a share in Kinross. Do I know when that's going to be? No. Could it be this year? Could it be 5 years from now? Yes. But I think it's going there. This is a very strong company and a very healthy company, right? But I thought it was very important to talk about the gold today because it's a historic occasion for the price of gold bullion, right? We continue to inch near our $3,500 initial target, and then we're going to be off to $5,000. If we look at the XRP members of Jabroni Killers, first mover advantage, that's the value of following this station. If we look at the XRP price, we were at the last video still right at where we were at. Remember the weekend pump advisory, the neckline at $2.09. You can see we got rejected beautifully at the still don't want to have anything to do with your advertising. We got rejected right here at the freshly minted bearish cross, where the 50-day got below the 100-day right there in the daily time frame, and we said that would be as high as you would go. And look at that, the price pumped up to there on Sunday, and then bam, got rejected back to the neckline like we talked about. Now it slipped the neckline for the first time, and this is critical. Now it's fighting to get back above it. If it doesn't, it makes another leg to the downside. That's telling you we're confirming to the downside. And then it looks like we were talking about Sunday that 24 to 48 hours, we would have to make a decision. And if we get rejected before you know it, you're going to be back down at the 200-day moving average at $1.94. And that's going to be starting to confirm a breakdown and using this as resistance now. And then before you know it, you're going to be at the wick bottom of $1.61 to go to retest that to see if you're not going to flush through there and maybe set the targeted move. Because as you do know, we are in this head and shoulders topping out reversal pattern, and we must hit this $1.29 target, at least in my own personal opinion. And that's where we're at right now on the daily. You can see we have that freshly crossed 50 underneath the 100 in the daily time frame. Those are going to both continue to slither down, which is just showing you where the major overhead sell pressure is, right? It'd be like looking at a map, and this map says in this area, this is where the crashes happen. You would be looking for a heightened risk of crashes in that area, right? Same thing with this. That's what the overhead moving averages are, or the underneath support, letting you know where the support should be or could be or has a higher percentage chance of being there, and you would look for it to be there, just like we would look for the overhead resistance as they continue to slither down and the volume doesn't continue to pump in any stronger over the weekly time frame, it to force you to the downside. And I think we're going to hit that technical target down there, right? If we look at AMP, it's attempting to pump. It still hasn't been able to do anything, and yes, I still do believe this will happen at some point, but we're going to have to continue to pay attention because it's threatening also to break back into this channel, which would have another local low of 0.00259. If it can confirm a breakout out of this, like it's trading along the downside of the support area now and bounce to the upside, your first initial resistance would be up here at 0.00535, and max potential on this pump up near the 746 to 831. But it's still like a volcano is lulling you to sleep, waiting for one massive eruption, right? If we look at the H bar, we met our mountain double top first mover advantage target that we gave you guys, top 1, top 2 in January, neckline, point of the breakout. And that's how we got this 15 cents. We thought there would be a bounce, some kind of a bounce off of there, and maybe potentially as high as the overhead moving averages that were forming a bearish cross and the golden bearish cross, or almost a golden bearish cross, 2 out of the 3 steps, where we have now the 50 below the 200 and the 100, and eventually the 100-day moving average will get below the 200, and it'll be short-term moving average on the bottom, like where it is now. Blue will be above the red and green will be above the blue, right? That's how this is going to play out. And we did see a bounce up to there, and it was a pretty good bounce from where it started, where the wick low was, because you have a bunch, this is a major support level, so you have a bunch of stops, 3, 4, 5, 6, 8% below the price running into each other as they're getting stopped out, right? So you have a pretty nice wick to the downside, and then you have a bunch of buyers down there, and we had a nice return rally like you would expect if it was 42% from the wick bottom to the wick high. So that's pretty good. Then you would expect to come back down to this major resistance zone, which is down here at the 15.5 cent level, and you did, and now you need to hold it. If you're trying to get short-term bullish now, you need to hold it and stay above it. If not, you're going to fall down and initially come down and make a local double bottom and where the wick is, and then you could start to trade back up and then go back to back test and confirm that. And if you get rejected, that's how you get down to the 0.09 cent level. If you want to stay bullish and want to avoid coming down there, you have to stay on top of this 15 cents, confirm above it, let the moving averages start to run parallel. You can jockey the price for a few days along it, gather some support, and then get some kind of news or some kind of bullish sentiment and get some kind of rapid increase in volume for a day or two, and then you can try to flip it and get above it, right? But it's going to be very hard. The markets are very bearish, but this is what we're looking at in the H bar at the current time frame. And then if we end out with the Bitcoin price, it's still sitting here, still don't want to buy you. With this head and shoulders topping out reversal pattern, we've been talking about how we thought we would get rejected on that weekend pump. Zoom into the full screen. We had that pump zone on this local double bottom. If we go into the 4-hour time frame to see it, get this like that, you can see the local W bottom or mountain double bottom in this case in green, and we had the max pump potential up there where the overhead moving averages are all cluttered up next to each other in that red, and you can see where we've gotten rejected both times, right? We have max potential on this because we did hit our major $74,000 target, and we're having the relief pump that we would think we would have, and we did see and are seeing. Max potential is 90,000, but I do think eventually this gets rejected and it ends up back at 74,000. And I think in the medium term, the next month or two, I do think we're going to come down to $58,000 neckline, right? So that's what I'm watching right now. We'll have another nightly video tonight, probably around 9 o'clock. It'll come out when I get home. Peace and love. The Rex Eyebrow, Jay.